Hi guys, today we'll discuss long iron butterfly options trading technique. Now, as you would have understood from earlier chapters, that in Ironfly we need to put in three different strike prices trades, and the total trades that we put in are four. So four trades with three different strike prices, which means that two trades will have the same strike price. And now as you can see, we have put in Bollinger Band. Now as you can see, the Bollinger Band stays straight. Once it stays straight, it's perfect for short Ironfly options trading technique. But today we are discussing long iron butterfly techniques. So if Bollinger Band stays straight, the price will stay within a certain band. For short Ironfly, this is perfect because we need the price to stay within a certain band. But in long iron butterfly, we don't need the price to stay within a certain band. We need it to go up. We need it to be perfectly go up and make us huge profit. Because in putting this trade, we will be booking the profit first. So $500, let's assume, is our loss. That will be booked exactly on the first day. Now it is booked, but we need this trade to end in profit. So once this trade end in profit, we get huge profit. So how do we assume or how do we make sure that we get the most profit? By looking at Bollinger Band. As we discussed earlier, if the price stays beyond the upper Bollinger Band, the price goes up. Right here. So these kind of positions are perfect. Example right here. Perfectly going up. And if you trade weekly options that expire every Friday, then that is the perfect moment. Because every Friday you can book your profits. And you can either go to some other stock or try your luck again in that same stock but book profits. And as we discussed, once it comes back, you can try to make things better. But in this strategy, that is long iron butterfly strategy, I would suggest to book your profits fast. Now let's see. Now as you can see, currently the market is set as going straight. See? Bollinger Bands are contracting. If you look at it, this is the top Bollinger Band, this is the bottom Bollinger Band. And here the top is 1635, here it's 1630. So it keeps on contracting. We move one day further, it again contracts to 1628. We again go one day further, it again contracts to 1625. So it is contracting. And once it is contracting, we know that the price will stay within a certain band. And if it stays within a certain band, then there is a serious problem. That is, it is good for short term, that is short Ironfly, but not good for long iron butterfly. So we will wait. And right here on this candle, you can see it has moved up. Whenever this happens, right here, this candle, let me put an icon for you. Right here, whenever this happens, you know something great is going to happen. So right here, you would initiate your trade. Now what would be the initiation of trade? I would suggest to be right here, the middle, the closing point. Wait a minute, let me adjust. Right here. This closing point acts as your as your loss making point. So if price stays here, this is your loss making point, and that's why we have turned it into red. The same way we are putting greens, that is, if the price goes beyond that, we make the most money. and with a 50 paisa difference, 50 cent difference, we have put in the green markers. That tells that the price will move up. With 50 cents, if it moves beyond this green line, we are in max profit and we have no problem at all. The same way, again 50 cent difference. Wait a minute. 1570 is 50 cent difference right here. So our top and our bottom is exactly the 50 cent difference between these two. Now let's see what happens. Again it goes up, then comes down, then goes up, comes down. Now as you can see, it's going straight within our red line. That is, we will be generating a bad max loss. 5 days, 6 days, 7, 8, 9, and we are in brilliant profit. So this is how you would know that it will come back. Now, there are two aspects of trading. Either you will trade short-term weekly contracts, or you will be trading long-term, let's say 1 month from now, contracts. Now, if you trade a weekly contract, then right here, it will be 3, 4, 5. Right here, the week will end, I presume. So if the week ends, you will be in loss, right? But you can extend it. You can initiate the trade again at the same aspects. So you will have again the time to see how it goes, because you know that the trade is in your favor. If you look at the Bollinger Band, the top one, right here it was contracting. And that's why we never initiated the trade. But once it went up, this price candle went up, the Bollinger Band is moving up. Look at its line. It's saying up, 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 up. Once it says up, you can continue to sit on your trade and can extend it by putting it in a new trade with a future week expiry, which would end 3, 4 and 5th day right here. If it ends here, you get to keep the full profit. And that's the best part. And even you can initiate right here the trade with 15 days gap, so that you have a way out. And the best part is, if you need to square it before, you can simply square it. There is no one asking you that you can't. So it's the best thing of both worlds. If you look at it, it continues. It's 10 day, 11 day, 12, 13, 14, 15, 16, 17. It continues to goes up. 18, 19, 20, 21, 22, 23, 24. Continues to go up. But right here, one thing to note is the upper Bollinger Band. It's 18, 16, 18, 18, 18, 19. It continues to go up. So there is nothing wrong. But right here, 18, 18, 18, 16. 1 day danger. Again it goes up. And now it's starting to contract. Once this happens, if you are in trade, get out. There is something definitely wrong with the trade. So I again want to emphasize, never ever sit into a trade that have a contracting Bollinger Band if you are considering a long iron fly trade. But let's presume we have a long iron butterfly trade right here. But right here, you could have initiated a short iron butterfly trade. In this chapter, we won't discuss the short trade because we have discussed it in the earlier chapter. But my point of view is, you can use these two methods to trade different option strategies in one go. As you can see, it continues to go straight. We suggested to trade right here, and after that 3, 4, 5, 6 days have passed and it goes straight. See? And once it closes right here on the bottom, it says there is a problem, and then it goes down. So on this day, if you have traded, you would be squaring it up. But this trade from here till here is a straight trade, and you should never ever put a long iron fly right here. If you have put it here, you would be squaring once it contracts. If you are taking a loss, do take it, no problem. But don't risk your capital, because my strategy allows you to make money and book profits earlier. Example, my trade says book profit right here on a short iron fly trade. If you see, it comes back and goes straight. That is a good thing. You might be saved from huge losses. But as in options trading, the biggest enemy against you is time, because you know that your options contract will expire fast. So why take the bull right through its horn? Why take the risk? Why put your money in danger? Why not have a plan that tells you to get out or get in? Because if you won't follow my plan, let's kick Bollinger Band out, then you have no idea what is happening. It comes down, goes up, comes down, goes up. You have no idea. It falls off. Right here my plan said there is something wrong, get out. It did went straight, but then it fell off. So never go beyond your trading plan. And that's why I've made this trading plan. I've made this trading plan from many trials and error. And I've lost huge money in trial and error. So you are the lucky ones. Because why? Because you don't have to lose money. You simply have a trading plan that works for you. And you can make money easily. So these monthly income strategies that we are discussing in this chapter will help you make good money without any huge risk. You can just sit and make money. As simple as that. Example right here. Our initial trade. We traded here. It went straight. It went up. When it was straight, we were losing money, because if it would have ended here, that's the maximum loss. But if you see, we knew that it will go up, and it did went up. Once it went up, it was always beyond our green line. We were always in profit. This trade was done in October 15th. It stayed beyond the green line till January 4. That's a huge difference. And you're a profit making machine. Now to initiate a long iron fly trade, that is, that the price will stay beyond these green lines, you need to find a time in history or time in future where the Bollinger Band is really contracted. Because that time will tell you that it is likely to take a decision today, 15 days from now, or 1 month from now, but it will take a decision to go up or down. I would suggest you to trade on the upside, because I have seen that the downsides are really sharp. So they are so much sharp that they will go down, hit a bottom, and then come back up. And in these strategies where we earn monthly income, we need the price to stay up or down for extended period of time. Not something like goes down, touches it, and comes back up. Because we are trading it for the future. Yes, for a weekly options contract, this is the best thing. Within 5 weeks, you get out. But I would still suggest you to trade on, even if you're trading weekly contract, and I would suggest you to trade a weekly contract. But I would suggest you to trade with a somewhat long horizon. Reason being, so that you don't get caught. You don't get caught in the wrong direction. That's why I won't suggest you the falling trades. Now right here, you can see the price candle has touched the upper Bollinger Band, which is the best thing. So we will initiate our trade right on this day. We will put in or extreme loss at the top, at the close, or 10-20 cents up or down. As the price is 14.22, so let's put in a 50-cent difference. That would be 13.70 right here, and 14.70 right here. So let's see what happens next. 1 day, 2 day, 3 day, 4 day, and we are in profit. 5th day is the weekend, and it stays beyond our price, and then it starts to fall, and we are in loss. But if you look at it, we are in loss, and then it comes back up, and Bollinger Band is contracting. Now once it is contracting, it is a bad scene. We have put in the money to make profit. This was the 5th day. If you were trading a weekly contract, we would have got out right here. For 2 weeks, we would have got out right here. But on the 3rd week, we would have got stuck. So if you're stuck, then you either have to book profits, book losses, or wait. And once it gets up, you get out. Now, you remember I told you not to stay in the market if the price is contracting. Yes, I did. But there is one rule to the trading. What is that rule? That rule is, if it is contracting, it's a bad move, and you should not stick to it. One thing set aside. Next thing is, if you look at it, and this thing is that you have to learn through experience. I am telling you the stuff, but this thing will come to you through experience. It cannot be taught you right away. If you look at it, the Bollinger Band is contracting, but our price difference and Bollinger Band contraction is far further away. It's so much huge that it's not getting like there. And once the Bollinger Band contracts, the price usually gets stuck in that Bollinger Band. So we know that our green line is still below, far below than the upper Bollinger Band. So we believe the price can come up, but on the bottom, on the lower side, if you look at it, the price and Bollinger Bands have matched. So we don't expect the price to go down. So even if we sit on the trade, you won't expect it to go down. Why? Because Bollinger Band has come up, and there's no clear sign that it will go down. If it does, it will extend on the lower side. Then it's again our bullish trend or bearish trend, which helps us to make money. But if it stays within the band, we can make money if it hits the upper band. And once it hits, square out your trade, book your profit, and go home. Why take risk? Because our plan got destroyed once the Bollinger Band got contracted. Right here, our plan is destroyed. Completely destroyed. We had to get out right here within these 2 weeks. We did not. And we got stuck. So if you get stuck, then do use your mind. I won't suggest you to use the strategy that I just told you, that on the upside you had a difference of like space. So you believe that the price will come back up, and once it comes back up right here on this day, you would have squared and got out. This is a strategy to get out. A quick, neat strategy to get out. But remember this. This is a high risk strategy that I just told you. Otherwise, once it gets contracting, get out. Book losses. Reason? You can always trade next day. So why take risk? You always have the next day. Book your profits, book your losses, and get out. Why take a risk? That is what my strategy is. And it's the best strategy available. Just look around, you won't find anyone telling you a strategy. What everyone will be telling you, that in Iron Butterfly, you put this trade, you put this trade, and you put this trade. That is it. But in my strategy, you get to know what is happening, when it is happening, and what to do in that case. Because if you won't know what to do, you would have no idea what is happening. Because just look at the difference between my trade and others' trade. If I remove Bollinger Band, you have no idea what is happening right here. It was going straight, it moved up, now it's again going straight. You have no idea what's happening. That's why my trading plan is the best, and you won't find it available anywhere else. Yes, people might copy it, but this is the best plan. Thank you.